Morning, everyone. All right, sorry about our technical difficulties that we had yesterday. A bit of a server crash over the weekend. We're back. Let's get going. Okay. Um, Yesterday's session in the U.S. we saw kind of a bit of a sideways to flat session after the recovery from the initial losses that we saw in the open. We really kind of opened at the lows, as you can see there, and just sort of grinded higher for the first hour and a half of the session, and really moved sideways from there. Kind of an interesting day of trade action. Really, no real reason why we are off so much. We saw a lot of the European indexes really sell off hard toward the beginning to middle part of the session. We saw the DAX really drop about 1% over a 30 or 40 minute period, as well as some of the other European indexes, and seemingly on nothing, and really just kind of recovered as the U.S. started to recover. So kind of a strange day of trade action, although very light. Obviously we were closed in London. Last night we were closed in a lot of the Asian markets. So we did continue to see the better than expected numbers coming out of the States. We saw April ISM numbers that rose to 55.2% from 53.1 in March. Really continuing the onslaught of good data coming out of the States at the moment. We had a couple of the big boys moving around quite a bit. JP Morgan getting hit pretty hard after a negative trading update. They talked about how revenues could be down as much as 20% because of difficult trading environments, and they also talked about, and we also saw Apple that pushed up through $600 for the first time since 2012 after their good earnings report the other day, and buyback and share split. So, but other than that, very little kind of to report out of the U.S. We really had an exceptionally quiet night out of Asia overnight, with Hong Kong, South Korea, and Japan all being closed. We also had the Australian Central Bank that came out announced interest rates this morning, dead in line with expectations. They held things in place. So we had a moderate rise out of Australia. We also had a moderate rise out of Shanghai, which kind of bounced on the back of some of the rumors that they may possibly ease some of the property controls there. So but very little going on in the Asian action. One of the things that's been sticking out over the last few weeks, and I've kind of been talking about it in the morning call, and I think everyone in the market is really starting to notice it. The Arison investment conference that's going on right now in the States. Some of the biggest names in the game, or the biggest names in the game, were speaking yesterday. Guys like Paul Tudor Jones, David Einhorn, all those kind of guys. Paul Tudor Jones actually came out yesterday and talked about how macro trading at the moment is as difficult as he's ever seen in his entire career. One of those big examples would have been the move in the treasury market and the precious metals market on Friday after an incredible beat in the non-farm payrolls number. All the macro traders selling, buying bonds, selling bonds, and instead they really rallied hard on Friday, and that's just totally contrary to anything that you could expect. Looking at this chart here, maybe just a little bit too early, too soon, when you kind of see about the end of QE1 and QE2. Markets are always forward-looking, and typically will discount things that they can see, that the market can see as sort of obvious ahead of time. But if you look back in 2010 and 2011, the end of QE1 and the end of QE2, you can see there marked very clearly on the chart. That's the S&P chart, where QE1 and QE2 ended, and the sell-off really only came about a month after the end of QE1 and the end of QE2. So I think we've got to kind of gauge ourselves for the possibility of the same sort of thing. I remember before kind of lulled a lot of people to sleep. We actually continued to grind a little bit higher, especially in the 2010 session, and put people to sleep. And the next thing you know, the price totally collapsed. So we may end up seeing the same sort of thing, that happens, after this quantitative easing cycle. So just keep that in mind. That's an amazing chart there, and it just really gives you something to think about. Like I said, the disconnects in the market right now are as big as I've ever seen, and it makes things difficult to kind of make macro-based calls at the moment. So I think we're going to have to stick with what's been working, what's reliable, for the current environment, and that's probably a little bit more of the technicals. All right, moving on. Harmony out this morning with third quarter numbers at headline earnings per share at 12 cents per share. Expectation was for 34 cents, so definitely a miss there. That 5% increase in recovery grade. Production was down 12% from the second quarter and was up 3% year on year. I think what really sticks out to me is that their all-in costs are all the way up at $1,224 an ounce, and that's obviously with a rand that's pretty weak. That's real danger levels, considering a lot of the guys forecast, a lot of the major investment banks, Goldman's, and some of those guys forecasts are well below that price coming year end on the gold price. So Harmony definitely continuing to look like the more vulnerable of all of the gold miners here locally. So I'll watch that thing, how it trades this morning. And then later in the States, we got Walt Disney that's going to report earnings as well. And in terms of market data out today, we've got right at the open, we've got Spanish unemployment, we've got Spanish services PMI numbers. Locally, we've got PMI numbers at 9:15. We've got Italian PMI numbers, French PMI numbers, pretty much across the entire Eurozone. We're going to see some sort of PMI numbers, mostly services PMI numbers. Then we're going to see the same thing in the UK. And then we're going to see retail sales numbers for the Eurozone as well at 11 o'clock. And then later in the States today, we see the trade balance at 2:30. So nothing really significant to talk about in terms of market data out today. But and volumes have been so light the last few sessions. We obviously holidays, across the spectrum last night, and in in Asia. We've also were closed yesterday in London. So the trade action has been so light at the moment, it's hard to take much out the trade action. So we're just going to have to continue to probably tread lightly until the market kind of shows us its hand a little bit. All right, let's get into the maps. All right, the first thing we're going to have a look at here is Anglo Gold. I actually wanted to show you guys the treasuries, U.S. treasuries this morning, but unfortunately, for some reason, it's not working on my charts. So we'll have to show you that later. But like we said, the treasury market, we actually hit the low on the 10-year yield. We hit the low of the year on Friday, I believe, or maybe even was yesterday morning, and that's coming after a slate of just much better than expected data in the States. Very important, and you've seen this sort of inverse reaction to some of these gold prices as well, and therefore some of the gold shares in the last couple of weeks to this. To the better than expected data. AngloGold came out yesterday trading really well kind of toward the U.S. opening, pushed briefly above this, the right shoulder of the head and shoulder pattern here at 194, but kind of failed it on a closing basis and really couldn't get anything going in the States either. This is going to be a very, very important level. If it gets above 194, I think you can write off this head and shoulder pattern at all, and you can start to look at this thing possibly coming up and testing recent highs. But if it stays below 194, I think it could be kind of bearish because we had a big push up in gold prices. We got people really caught wrong-footed, I think, in some of these shares. I may be a bit biased because I actually am short at these at the moment, but yeah, I think this is a big level and you need to watch this one in the next couple sessions. All right, Murray and Roberts. Not one that I show all the time. You can see here on a kind of a continuation pattern, popping up above the all-important 55 level, sorry, 55, 25 level, and really just moving up out of this downtrend. We've been in this downtrend for the better part of a year, and kind of reversing pitch here a little bit and starting to look a little bit more bullish in terms of the setup. So above 25, I think maybe it's worth a nibble on Murray's. If it gets back below 25, I'd be a bit cautious. All right, Able has just been ugly the last couple days. I mean, fundamentally, there's a hell of a lot to worry about here. You can see here really kind of dropping below support. But I think what's going to be most important is you're going to want to look to see if this thing can actually take out closing lows. If we can take out closing lows, which are right here at 930 and Able, then I think this thing can really gather some momentum to the downside. If we drop that level at 930, I think it's going to start to set off some alarm bells. You already got a lot of guys, they're talking about next round of capital raising. People are going to be swerving big time. I don't even think all of the numbers from kind of the delay in Rustenburg have probably come through and hit all their books. I mean, have they written all of that down already? Who knows? But bottom line is, there's a hell of a lot to worry about in Able. So watch that closely. That could really start to gather some steam to the downside if things don't improve. All right, next one I'll look at is Aspen. Which obviously it broke up out of this flag pattern a few sessions ago, but we kind of yesterday's session pulling back to test and some sort of support. Obviously 280 has a significance technically here as well, but I think some sort of support on this flag, probably down here closer to 275, might not be a bad little area to nibble on Aspen if you get a chance over the next couple of sessions. And then the last one I'll show is Grindrod. Grindrod really kind of managing to hold. I mean, we were looking incredibly bullish on this stock only at the beginning of the year, and now it's really kind of underperformed the overall market quite badly. You can see here this is really major supports. I mean, how many touches that we have held on this line here that comes in at 2480. If we drop 2480, I think there's no reason technically to own this thing. If we can hold 2480, and because we're so close to 2480 at the moment, I think technically the risk reward is pretty good, and we're kind of threatening to sort of break up out of this little downtrend anyway, this little downward sloping triangle. So just keep that in mind, and Grindrod could be a nice little risk reward setup here, unless it closes below 2480. That's it for today, guys. Thanks a lot.